Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to analyze the markets and talk about what's going on. First of all, the dollar index is at a pretty decent decline right below that 20-day moving average. It gapped right below it, and we see this bottoming doji star pattern, but I don't see it finishing out that way. And the main reason why is because we're at the very beginning of the session, and the beginning of the session always looks like a falling star, so we'll have to give it until the end of, basically the end of tomorrow, or I guess end of today, depending on what time zone you're in. But I live in Arizona, so therefore I would still say I'm in, Wednesday. So again, we're going to look at Thursday and see how it plays out. But first of all, dollar index more or less gaps down on Tuesday's session, and basically what that led to was a Dow component having a pretty nice solid rally that same exact day. And even today we've had a pretty decent move up in the stock indices. So again, overall the momentum is still pretty positive for the Dow component, and nothing much to it. But I have to admit there is limited upside in this marketplace. As you guys can go ahead and see, 12,800 would be your upper range, and the most the market could really move up is around 3%. So we're going to give this market some time and see it move into that 12,800. It could take up until the end of January, but until then we're just going to be a little patient, and we're just going to watch the markets very closely. And it's going to be between this narrow range before we eventually pull out. And I could be wrong, but I mean, I still feel that markets have a little bit more momentum left in this market. As you guys can see, the volume has been relatively flat and low. As you guys can see at the very bottom of the chart, the volume sits at around 150 million, and it is sitting close to that 20-day moving average. And as long as volume remains low and on the lower end of the spectrum, chances are the markets will continue to go higher. So low volume is pretty good for a marketplace, but once volume starts to climb, you're gonna notice some pretty strong shifts in market sentiment. So every single time there has been a lot of volume, there has been a lot of selling. So we're just gonna give it some time, and if volume does continue to stay on a steady trend between 100 to 200 million, somewhere between there, chances are markets are going to float a little higher before we eventually see some sellers sell some of their equity stakes out of the market. So just give it some time, and we're going to wait for the pump to eventually dump. So let's move on to the next chart, which is going to be the Euro-US dollar. Euro-US dollar is still trading in this narrow channel, and it's yet to be seen whether or not it can break out of that channel. On today's session, you're kind of seeing it, gap a little above that channel, but we're going to watch it very closely because I've been fooled before on this chart, and I don't want to be fooled quite again yet. So again, let's just watch this channel very closely. If it does break above it, chances are we're going to head straight into that 50-day moving average. So let's just keep a close eye on it and see where it's going to take us. Right now we're trading right above that 20-day moving average, which is indicative of a pretty positive move, and we'll just watch and see. Again, reversals don't happen very often, and we're going to have to watch some factors coming out of Europe and Asia primarily. So again, we want to watch this market very closely, and the main thing I really want to focus on is the Italian bond yields and see if they're going to continue to pull back and decline into that 6% area, or if they're going to continue to be range bound between 6 and 7%. We're just going to have to wait and see. But for right now, Italian bond yields have been on the decline, and therefore the Euro-US dollar has enough confidence to move a little higher. But over the long term, over a multi-year trend, considering the Italian bond yields, I'd really have to see the Italian government cut back their spending enough for their budget deficits to eventually, stop, and eventually we get to a point where the government is at a budget surplus. So we're just going to watch and see. For right now, the Italian bond yield is pulling back, and therefore it's giving the Euro-US dollar just enough room to move a little higher. And the same thing is playing out in the Euro-Japanese yen. But again, fundamentally, none of the issues have really been solved. I mean, yes, politicians have vowed certain policy regulations, enforcing certain rules, blah, blah, it's just a bunch of garbage. In reality, what we really need to see is, again, results. Results speak everything, and right now we're dying to see whether or not these governments are able to cut enough spending to make a real difference, and in reality, give those bond investors some confidence. But from what I'm seeing right now, a lot of people are, all those people that were, I guess, shorting the bond market are collecting their gains or whatever. But again, I'm not much of a bond investor. I'm not exactly sure how you would sell short a bond. I guess it would probably work similar to a stock contract. But and if you can sell short a bond, I mean, I'm assuming those people made a lot of money. So for right now, we're just going to have to wait and see, and I'm going to probably have to do some research on shorting bonds myself. So anyway, moving on. Let's go ahead and talk about the gold market. Gold market has been able to break out of this little pattern right here, but it's not enough to really go back to those multi-year highs and see us being able to break above them quite yet. Again, the target is still sitting at around, and it's getting a little closer because, again, you guys notice that this line right here continues to trend a little lower, and it makes it a little easier for you to approach the target. And right now, we're getting very close to it, and we might be able to just break above it. So we'll just wait and see how this all plays out. So again, if we can break above this on the gold chart, I would definitely be bullish. And again, all of you guys out there who are saying that, oh, Alex is a perpetual bear, that is so not true. The only reason why I avoid trading markets is when I feel that there might be a potential that the markets might not play out the way we want it to. So I'm just relying on technical analysis to bring in some key insights into whether or not we should make an entry or not. Right now, we're pushing against this trend line, and it doesn't necessarily mean we'll break above it. And in fact, a lot of times, whenever you hit this trend line, you often see markets pull back from it. So we really want to wait and see and make sure that this market is able to break out of this pennant right here. So once it's able to break out of it, it is a very good signal for us to continue buying into gold. But for right now, we have to wait and see. As far as silver is concerned, though, silver has been able to break this out of this area, not out of the main, this area, the super trend line, way back, way back over here. It hasn't been able to do that. It's never reached the bottom end of it, nor has it ever reached the top end of it. So that is this is a trend that's waiting to be seen. And what these trend lines mean is, if it is able to break out of the top end of it, this trend line right here, that would be a multi-year uptrend signal. Now, if it were to break below this trend line, that would be a multi-year downtrend, and it could be easy for us to imagine us trading all the way back to $8 to $10. Now, the future is yet to be seen, and again, when you're trading at the very right end of the chart, nothing is certain. However, there are key signals that we can trade based on and anticipate based on current events or current market behaviors or market cycles. And right now, based on earnings season, the seasonal factors in the market give us a slight edge. So overall, I am still bullish silver. I'm bullish silver, and believe it or not, I'm anticipating us to trade somewhere around $34 and that 200-day moving average. That 200-day moving average will be a stickler. It will definitely be resistance. But for right now, I am a bull on silver, and I am actually long the AGQ. So I am actually waiting an opportunity to close out of my silver position for a profit. But for right now, we have to wait and see. And I'm going to give this market another $4 to the upside per ounce when I trade my leveraged silver position, which is the ProShares, UltraShare, AGQ. AGQ is a ticker symbol. A $4 gain right here would imply a $12 gain over on my leveraged ETF. So I'm really awaiting that, and I want to see just how much movement and upside there is, but I definitely think we're going to touch $34 in a matter of a couple weeks. Okay, Bank of America. Bank of America right now is trading in an upwards trend, and I was mentioning this huge margin of safety in one of my videos, and it's true. Yes, I know, earnings season for the banks have been very mixed, and that kind of comes to prove the point that right now economic factors aren't so big a concern. Right now it's performance. How well can a bank perform? How well can they cut back their spending, cut back on their operations, and still produce a profit? In other words, how well can you manage your income, your cash flow, so that you can cut back any excess waste and hopefully generate a profit. And some banks are doing a very good job of it, and some banks aren't doing as great of a job of it. Recently, Bank of America has been on the end where it hasn't done a great job, but lately Bank of America has been firing a lot of people, firing a lot of excessive waste, waste in money, waste in resources. And you know, I'm not saying that you guys are necessarily wasteful. I'm just saying, you know, the company's not generating a profit, and therefore it's cutting back on a lot of its expenses across the board. You know, I mean, even there, I was just reading the Wall Street Journal recently, and Bank of America, in their headquarter building, they cut back their occupancy in that building by 30%. And if you don't know where the Bank of America building is, well, it's in Georgia. And that Georgia, you know, the headquarter building, it's a huge building. You know, you guys should go take a look at it. But basically, Bank of America has been cutting a lot of headcount. They've been managing their expenses, and hopefully we can see Bank of America improve. If not, it's still okay. There's only so much room the stock could head even lower. I mean, we're heading all the way back down to, you know, all the way, you know, near its 2008, 2009 lows, and it's not very justified considering the economic picture and scenario we're going through right now. And let's also consider the fact that Bank of America has a huge margin of safety. In fact, their tangible book value it sits at around $14 per share. So if you have a tangible book value of $14 per share and you're trading at $6.79 per share, you still have this huge margin of safety all the way from here to right here. It's a huge margin of safety, and again, it's unprecedented that you have opportunities like this in the marketplace still. Moving on, Sears Holding has ripped higher. It has ripped higher, and I still think that there's, you know, somewhat limited upside. And you know, and retail sales might, you know, inflate the performance of Sears Holding this season. However, I am not that optimistic on Sears Holding. I still think management is flawed, and I'm just not convinced. So I'm just going to wait and see. I'm going to watch their price to earnings. I'm going to see how much money they're going to continue to borrow to finance their operations. We're just going to wait and see. But by the end of January, I do think I am definitely going to short this stock. Anyway, take care, folks. If you have any questions, leave a comment right below, and I'll get back to you.